Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday, the 25th of December, 2019. And Merry Christmas to you all. Today, we're going to give our forecast for silver prices to the end of 2019 and the direction we predict they may be heading into 2020. Now, on Sunday, we provided our gold forecast and have placed a link to that video in the description box below. And in case you haven't had an opportunity to hear it, we more or less stated to expect gold to rise to around $1,500, and don't be surprised if it goes to $1,525, especially as there could be profit taking in the equity markets. And also, we are now operating within a thin market environment where the slightest news, whether it be positive or negative, would or could have a larger than normal effect. We also produced 3 other videos in the previous couple of days, and again for ease we've provided links below. Now, before we look at silver, we have a confession to make. This video was due to be published on Monday, but due to technical difficulties in that our computer system completely crashed, we were unable to upload it to YouTube. Then yesterday we produced our podcast discussion with controversially Greg entitled Contention, Acquiescence and Redemption at Christmas Time, where Greg, as always, was controversial and managed to get in his pet themes of climate change, religion and politics, again causing controversy and a mixture of support and denigration from our subscribers. We have to add that Greg does not necessarily speak for all of the views of the people behind this channel on every subject, and even though we may disagree with him on some, for example religion, we still believe to our core that by providing opposing views stimulates debate, and hopefully leads to those of us who have rigid beliefs about certain subjects to think a little wider than our own prejudices and learning to date. Even if we end up still disagreeing, we will have thought a little wider because of the points made. And this we believe to be healthy. Otherwise, we shall all enter our personal belief silos and discard everything that does not appeal. And that, certainly based on our experience, prevents growth, learning, and innovation. After all, if we did not look for alternative views and remedies, doctors would still be using bloodletting as a cure to most illnesses, as has been used in bygone days. Further, despite having some very opposing views with controversially Greg on certain issues, we have still managed to be friends for nearly 20 years. And therefore we see no reason why the public at large could not achieve the same goal. Now, our original videos on silver basically boiled down to us saying, do not be surprised to see silver in dollar terms rise back to the price we've been predicting during the past 2 to 3 months, or if in fact 4 months, of around $17.50, especially when it became clear that the rise above $19 on the 4th of September was unlikely to be sustained. We stood alone, yes, alone amongst all of the main YouTubers, stating that we would not see $20 silver this year, and if anything, the mean would gravitate around this $17.50 mark. We smiled yesterday when we saw 3 YouTubers claim that they knew silver and gold were going to be at the level it is now, as they predicted it some 2 weeks ago. Well, they certainly were not predicting $1,500 gold and no more than $18 silver 4 months ago for sure, as they were quoting $25 to $30 silver and $1,800 to $2,000 gold by year end. And now to claim that 2 weeks ago they got their predictions right, well, beggars belief. However, it is Christmas, we should be more charitable. So kudos to them for at least getting it right over a 2-week period. Although the end of the year has still not quite been reached. Anyway, back to our situation, which is more relevant. Yesterday, Christmas Eve, and on Monday, we saw quite a substantial rise in silver, And this actually surpassed our 1750 target. And whilst it's still possible that it could fall back by the end of the month, as there are just a few trading days left, we shall express our position in a moment or two. In our gold video, we stated that gold had risen some 17%, 12 months up to the date of publication. Well, up until yesterday, it has in fact risen 17.86%, up some $227. And silver is up $2.72 on a year ago, a gain of 18.07% in US dollar terms. Now in sterling terms, gold's up 15% and silver's up 15.2%. So a few percentage points less than in dollar terms. But that's mainly due to the recent strength of sterling. That percentage would have been at similar levels if sterling had held its rate as it stood a couple of months ago. Anyway, creditable performances, but once again, though, compared with the Dow, which based on yesterday's close, the Dow is up 34%, and the S&P 500 is up 39% now, and the Nasdaq is up an incredible 46%. And the FTSE 100 index lags at being up only 19.5%, which is why many brokers are predicting that UK stocks are the way forward as far as equity investment is concerned. Now, looking back through our various videos and records, and especially comments made in our regular updates, we expected at the beginning of the year for silver to end 2019 somewhere really between $15 and $16, with outliers at $14 to the downside and $17.50 to the upside, especially if one considers at that time, for the first 5 months or so of 2019, silver did tend to vacillate between $14.50 and $16 most of the time. And to be frank, we saw 2020 as being more exciting for the precious metals, especially as it would be an election year. Now, the dispute with China was more or less seen as something that could be overcome quite quickly, and geopolitically, President Trump appeared at least to be making positive gestures towards what we would call traditional global enemies, thereby at least giving the impression that world conflict would reduce. We could see that by April, May, the central bank was likely to lower rates, not by much, but enough to underpin silver at the $14 level. But we could not really see too much, which would push it much beyond $16, if we're honest, at that early stage. And to do so would have required some quite major conflict or financial failing. Well, to some extent, starting in June and peaking in September, such failings, or the fears of failings, came to a head, with silver peaking at $19.30. Looking at that time, admittedly, to go even higher, and the pumpers stating that $25, then $30, and then $50 was on the cards, with the year ending close to, if not surpassing, $50, and then running next year onto $100 silver. If you don't believe us, go back and look at the YouTube videos. Now, as we mentioned in our gold assessment video, we have to admit, our economic modelling, which we've used long before we set up this channel, suggested something quite different, save one factor: the ratio or weighting we have to place on fear and greed, which is more experiential than scientific. Now, this led us, therefore, to predict on the 29th of August, when silver was standing at $18.48, some 60 cents or so below its peak, we stated then that we believed a correction is coming short term, meaning a downward correction. And it did actually dip into the 1660s recently. And that video got us 14 thumbs down, more than usual, but 347 thumbs up, even though less than 6,000 views were received. Now, even though we expected a correction, we still added a too strong weighting to the potential bounce back that could occur because of the fear factor. As politically Trump was in turmoil with his cabinet and appointees, the battle with China was deepening, he was threatening the EU and NATO, and this is what we concluded in relation to silver and gold. And this is a direct quote from that video back in August. At the year end, we are expecting gold to fall back to $1,550 to $1,600 and silver to $18 to $19. Now this was 4 months ago, and whilst we may have overshot slightly on gold, and as we stated on Sunday, we now expect gold to hover around this $1,500 level, and possibly rising to $1,525 as an outlier, we can certainly see silver hover around the $18 level, especially after its burst in the last couple of days, which could be extended a little before the year end. Now again, we've placed a link to this August video in the description box below. Now, as we mentioned on Sunday, short of a black swan swimming by or a tumultuous bank or financial institution collapse, the gold and silver market volumes have been and will continue to be slim. This means that any positive or negative news is likely to have a disproportionate impact on the price. So this week, shortly after Christmas and Boxing Day, generally does not paint a true reflection of where silver prices will be heading, and we really have to go to the second and third weeks of January to get a much clearer indication. Of late, the dollar value has been the prime determinant of the silver price, and that has been predicated by news of Phase 1 of the US-China trade deal, which, as we mentioned again on Sunday, we're all told is agreed with, just translations and minor details being amended, so that it will be ready for signature in early to mid-January. Now, if that does come about, then equity markets will continue to rise. Now, depending on whether they fall by the year end for profit taking or not, if they don't fall and they continue, then we may see even more new highs in January. If they do fall back a little because of profit taking, then we may very well just see a recovery to the current levels. But we have to bear in mind that equity markets and gold and silver markets tend to do well at the start of a year. So we can see mild rises in prices moving into 2020, and especially if the China trade deal is signed, certainly in equities. But we have to bear in mind, of course, this substitutional effect for silver, because if industrial demand falls, that has a downward effect on the silver price, but then generally silver as a monetary metal becomes more attractive, and vice versa. So you have this schizophrenia with regards to silver. And the question is, which has the greater impact? The demand for it as a monetary metal or the demand for it as an industrial metal? And it's if you like, paradoxical relationship. So if a China trade deal is signed, whilst the demand for silver as a monetary metal may actually have an adverse effect on it, it'll have a positive effect on the industrial demand, because the fear factor of silver as a demand dropping because of reduced trade slightly becomes a thing of the past. And so we may see its price continue to rise. We also hinted to watch out for North Korea and their so-called Christmas surprise, as if there is one. And it isn't pleasant. This could have some bearing. And we are receiving reports, which will be announced by the media soon, that tensions here are building up again. But, that said, we would be surprised if North Korea were to launch a very serious long-range missile, because that really would cause the rest of the world to be incredibly antagonistic towards it. Now, from speaking with a few traders who are actually in work and making a calculated guess or estimate, it's quite possible that in this last week of trading, equity traders may decide to take profits. After all, we're talking about extensive gains, and in the past few weeks, multiple all-time highs have been reached. It is quite possible, therefore, that both gold and silver will be supported at their current levels because of this possibility. And it would make some sense. Though traders will be looking into January for confirmation, as already mentioned, of the US-China trade deal, which will bolster markets again. Therefore, our prediction for silver for the end of the year will be between 1750 and 1825. with it quite likely approaching that psychologically important level of $18 being its prime target. That said, much depends on traders' positions and whether there is profit taking to take or not, and trading balances to be satisfied in either direction. The second to third week of January will give us a clearer position for 2020, especially as we will know if the China trade deal is seriously going to happen or not, and 2020 is going to be probably the most interesting year for both equity markets and gold and silver than it has been for a long time. We shall share our thoughts and estimates with you then and give our 2020 price prediction. But precious metals certainly, while markets are thin, look to be quite buoyant for the moment. Now, all of us here at Illuminati Silver wish you a most merry and enjoyable Christmas period. And I, the narrator, having suffered 2 recent bereavements, will nevertheless do my best to sustain my aged mother at this time, and try and share the delight of what is normally a joyous occasion. And once again, I wish to thank all of our listeners for their condolences and sympathetic comments relating to those bereavements. And we are confident that for those stacking gold and silver, 2020 should prove to be a most prosperous start to the new decade. I also wish to thank Controversially Greg and Journo Marcus and Brother Anthony for their contributions during the past year. And we shall be having a new person join us within the Illuminati Silver fraternity soon. And my most gracious thanks to Bowman in particular, and Aurelius, and 1 or 2 others who have helped to make our Discord channel the success that it has proven to be in a relatively short period of time. Thank you so much for listening, and if you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.